Everybody, and welcome to What's Hot on the Open here at MarketStream.live. My name is Joe Cusick from the Cusick Group, securities offered by MoneyBlock. The markets are open, they're moving, and the data has really been the catalyst so far this session. The initial claims came in, best level that we've seen since July 21st of 1973. Man, pretty impressive. That basically gave the buy the dippers enough of a push to basically pick up the market on the open. Currently, you see that the Dow Jones Industrial is up 34.51 at 20,810.11 cents. You have the NASDAQ. That was the laggard yesterday. The NDX, the NASDAQ 100, up 132.67. Retraced everything that it gave up yesterday, trading at 53.52 and 67 cents. You have the Russell 2000, up $10.39 at 1406.19, and the S&P 500. The S&P 500 was a little bit of a laggard yesterday all day, consistently. The SPX, the cash settled S&P 500, trading at 2366.62, up 370. Also volatility, a little bit muted this morning. You'd expect after a nice bounce this morning that volatility would pop, actually only up a penny. So it's actually not moving to the downside at 11.75. We're going to watch that very closely. Still very muted. These are right off of the lows that we've seen probably in the last decade. But the point being is still holding in there. We're also seeing that bonds are holding in there. Taking a look at TLT, the hybrid, hybrid of the 10-year and the 20-year. They call it the 30-year. They call it the 20-year bond ETF. Trading up 36 cents. So bond prices are actually moving up today at 120.67. Also, we had an API report. We'll talk a little bit about that. We're seeing gasoline, nat gas, and oil all moving up this morning into the market open. Speaking of that, let's just take a look at the Fed Funds tool. This is a tool that's called the Fed Watch tool. It's offered by the CME Group. This is a tool where it gives you the probability of a rate increase at the next meeting. Now, we've heard a lot of discussion about that. And now with this promising claims data that came out, it's actually got I believe a 4-month average, or an average right now of under 241,000 on claims. Again, extremely low, lows that we haven't seen in decades. They're giving basically a 77.9% probability that rates are going to be between 50 basis points and 75 basis points. That makes sense. We're already at 50. So it looks like a rate hike could be on the table. We've heard Fed governors out talking earlier this week. It could be as early as March that we could see a challenge of that 75 basis points. Now, above 75 basis points, getting more aggressive. In other words, they move it not a quarter but a half. Only about a 22% probability of being above 75 basis points and below 100 basis points. What does that mean to consumers? That means that we're going to be paying more on our personal credit. That means that we're going to be paying a little bit more on loans, and anything that basically has an interest rate, those are going to go up. But that's a positive. That means that there's growth. Speaking of growth, let's actually take a look at the markets. And right now, basically what you're seeing is the S&P 500, again, just really moving to the upside. As a matter of fact, this morning with the spiders opening up and the S&P's up basically about 10 points, you're seeing that we're going to challenge. And as a matter of fact, you're seeing that I'm comparing. As a matter of fact, I compared the S&P E-mini March futures, which are the current front month, against the spiders. And you can see that they're currently trending to the upside, especially after that small consolidation early in February. Now we've been to the upside. This is the area that you're going to want to watch, folks. If, in fact, the market comes under pressure, which right now it's not. It's hitting all-time highs again. But if it does, if you're looking for an area, look at the 20 and 50-day moving average. That's where you're going to see a larger contingency of buyers, potentially, especially if the forecasts and the sentiments are that with this pullback, there's still enough bullish information. As a matter of fact, Treasury Secretary Mnuchin, and I know I just slaughtered his name, basically came out with some comments twofold this morning on all of the major except for MarketStream, he should have been on here, where he was discussing that there is tax reform that's coming. This is a very important component to the markets here in the U.S. that tax reform has to get through. They're going to have a plan out publicly that's going to be circulated in about a month, and he is hoping and pushing for a passage by August before the recess. That would be extremely aggressive, but again, the markets liked it, and they've taken off to the upside. Taking a look at the crude markets, I want to actually take a look at USO because the crude markets have really been moving to the upside. And actually, I want to do a comparison chart here with the fact that the API data came out overnight with a larger draw from the oil stockpiles here in the States and from the gas stockpiles. It has USO and UGA. Those are the ETFs that track oil and gas on the move. As a matter of fact, if you actually take a look at the comparison chart, I'm going to actually take a look at CL, and let's look at the crude oil futures. I'm going to scroll down to April, and we're looking at a comparison chart right now. Now you see that crude had initially dropped. We're going to see a bounce here today. It's right below its 20-day, it's hovering right around its 20-day moving average and broke below its 50-day moving average. That's why crude was trading negatively when it was trading at $53, or USO trading right around that $11.30, $11.40 level. We want to see a challenge of the $12 level. That gets us above these moving averages with some comfort on USO. You also want to see it well above $54, actually challenging $56 for the bulls to get some momentum on crude. If we start to see that, then you're going to start to see a move in the market. As a matter of fact, I will put the crude contract up there so you can get a better perspective on the actual commodity itself. And I will get rid of this comparison chart. This is the area that you're watching. As you could see, the bulls, it was trading at 53.85 last night. It is now trading at 54.66 this morning. You're seeing that it is trading up in this level and is now challenging new highs. It bounced off of its 20 and sliced back above its 50-day. If the bulls are going to get momentum, you want to see that 20-day moving average start to trend to the upside. That means the short-term bulls have control. That means the mid-term bulls have control in crude oil. And that means that we could see some further growth, even though we still see that the rig counts are going up here in the U.S., the shale production is still very strong, and it's probably going to get stronger, especially if we start challenging the $55, $57, and $60 levels. We also had some notable earnings overnight. You had Tesla. Tesla actually disappointed. It's down this morning. Right now, right around down about $4.51. You're going to want to watch this level here, $2.65. This is going to be a critical level with the stock down $4. You're going to want to see it hold this level. A break here. Watch buyers come in this area between the $2.55 and $2.45 level in Tesla. A break of the $2.40, $2.35 level means that the short and midterm trend is in jeopardy in Tesla. We'll watch that challenge. Also, L Brands, they came out, they disappointed as well on their earnings. I'm sorry, that's not the right symbol. They disappointed on earnings, and I apologize, I have the wrong symbol on that one. And they're down $7.83. They also gave poor guidance. Also, darling NVIDIA, NVDA, there was a downgrade that I saw hit the headlines early in this, right on the open. As a matter of fact, you see NVIDIA right now trading down at 105 off of its close yesterday at right around that 110 level. So you see that the stock is down basically about 5% right now. It broke through, couldn't break through its 20-day moving average. It held support on its 50. Now it is clearly below its 50. We could see this darling in a little bit of jeopardy. This is no man's land right now. This is the 200-day moving average. Watch NVIDIA very closely. Sellers could become very aggressive today, especially if they can't retrace and retake that 50-day moving average. This is a level of significance. We're going to see if this starts to ramp up, especially if we start to see some volume. Finally, taking a look at a big box retailer, Kohl's. Kohl's stores reported they had a decent earnings. Kohl's has been beat up, and you can see right here it has gone through. It's been through its 50-day and its 200-day, but it's held its 20-day moving average. That means that the short-term bulls have gained some sort of control. It's consolidating here, and now it looks like it needs to break out. Now, this is a level that you're going to watch right here. This level right here, which is the 200-day moving average, comes in at $43.20. This is going to be a level we'll watch closely. This means that anybody that's been holding the stock for over 200 days, basically this could be a point where they say, I want to get out, especially after this gap down from a past earnings and also the retail sales from the holiday season disappointed. And we saw a lot of that in the big box. We want to see a retracement back up and get into this level here and see this trend continue if Kohl's is going to have any momentum to the upside. But right now, consolidation with some positive news, but it has resistance at 43.20. All right, folks, that is it right now for MarketStream.live. You could check out these tools and all of the other assessment tools, probability calculators, seasonal charts, all here on MarketStream.live. And stay tuned. We'll be back with a new strategy that we're going to discuss at 1:30 Eastern Time here at MarketStream.live. See you then.